Petaling Jaya, the industrial real estate Vermont Trust KEIT segment is expected to be the least affected by the current lockdown, as most manufacturing businesses have been allowed to operate. Research in a report yesterday that the industrial REIT segment remained a safe haven, but businesses within the industrial sector have been faring well. Axis KEIT is the only industrial REIT that has no force majeure clause, implying that all of its circa 150 tenancies have no legal ground to ask for discounts or rebates. However, the group was willing to consider rental deferment on a case-to-case basis for struggling tenants. However, the percentage of rental deferment, even during the peak of the pandemic during the March to May 2020 movement control order phase, was minimal. The research house said it favored Axis REIT for its robust resilience during the pandemic. The group is possibly the only under our coverage confident of positive reversions, and downsides are limited with minimal expiries at 18%. Fundamentally, the group is actively acquiring numerous bite-sized industrial and assets, targeting RM 135 mil for now, supported by its low gearing of 0.33 times, which could potentially accrete up to 5% additional earnings in its financial year 2021. Separately, Kenanga Research said the office segment will continue to remain stable, as tenants have resumed working at offices or have the option to utilize work from home arrangement, thus ensuring business continue. On the prospects of the REIT industry in general, Kenanga Research said it was optimistic of better days ahead. The government appears resolute in getting the country's economy back and running again. The national vaccination program will be picking up pace as mentioned in the PEMULI package announced on June 28. One of the main focus of the package is to increase the rate of vaccinations from the current 200,000 per day. As of June 26, 6% of the population had received both doses of the vaccine. If the country maintains the current rate of vaccination, at least 80% of the population would be able to get their first dose by September and subsequently, their second dose by December. Barring any hiccups from the new Delta variant, Kenanga Research believes that adhering to standard operating procedures post-vaccination should suffice in combating the pandemic. As such, he believed that the sector will bounce back in 2022, it said. Separately, Kenanga Research said it expects the 10-year Malaysian Government Securities (MGS) to maintain its upward trajectory towards year-end, given the opening up of economies and recovery post-COVID-19. To date, the MGS has already risen by 27% from 2.58% to 3.3% currently. We prefer to remain conservative on MGS targets, increasing it to 3.6% in light of the COVID-19 situation improving towards year-end and a steepening yield curve. All in, we lower REIT's target prices by 4% to 11% on a higher MGS target. The MGS comprises marketable debt instruments that are issued by the Malaysian government to raise funds from the domestic capital market. Source The Star, the 20th of May 2021. News sponsored by CTM Joseph NG.